In today's financial snapshot, global markets show a roller coaster ride as the US-China trade tensions remain unresolved. The S&P 500 ended its six-day winning streak following an inconclusive meeting between the two superpowers, with earnings reports hinting at tariff-induced stress. This unease is reflected in the Fed's monetary policy, with Governors Waller and Bowman possibly dissenting for the first time in 3 decades. This could signal a shift in stance, keeping investors on their toes. Meanwhile, bond investors are closely watching the US Treasury's plan to borrow $1 trillion, hoping it will keep down longer-term rates. Treasury Secretary Mnuchin calls trade talks very constructive. Inflation continues to ease in Australia, locking in an August rate cut. Singapore's central bank keeps its policy unchanged amidst looming US tariffs. Geopolitical tensions send oil prices soaring, with Brent crude hitting $72.51 per barrel. Gold, however, may see a resurgence due to surging demand from central banks and individual investors. Economists predict a reversal of negative GDP growth, but warn it might be misleading. The IMF upgrades its global growth outlook thanks to easing trade tensions. However, the US is set to implement a 50% tariff on copper imports, with potential impacts on Chile and possible US-Europe metal alliance. American consumer confidence improved in July, but remains clouded by concerns over tariffs and labor markets. In brief, we're seeing mixed signals across the globe as trade tensions persist, yet there are glimmers of hope with improving consumer confidence and some positive economic indicators. Stay tuned for more updates as these complex financial landscapes continue to unfold.